Hello again. So yeah, apologies for the delay and apologies for the wait. I will be joined by Gabriel soon. Thank you so much for your patience if you've actually waited to view this. Apologies. So we're currently live. We're doing the stream for you guys, and what you guys can see is obviously the crypto chart in front of me. So with regards to the charts, there has been a development. This has all been drawn on last week. With regards to what has happened over the last week, we've had a very big bearish period. This is the one-day chart. And this trend line looks like it could act as potentially as a line of support. So right now, the current price is 9,363, and I'm now joined by Gabriel. So yes, apparently we are live on YouTube, but not live on Facebook. So thank you guys for joining us. There has been like the world's worst technical difficulties from today. I think it stemmed from trying to record the people coming into the office to do their new Wirex accounts. So we've had a lot of issues, but let's not dwell on the negatives, and let's get into it. As you can see, we've got the charts open. I'm just about to be joined by Gav, so Gabriel's coming in now, and we are live on the YouTube at the moment. But
we can't get live on Facebook, bro.
I don't think so. I'll try something.
All right, I'll just give a few updates while you're just having a look at that. Hello, everyone. It's good to be back here looking at the chart again after 7 days have gone past since the last time we did this. Few highlights for me from the past week. As Raf I heard just mentioning, we've had 2 groups of customers come into the office and go through to get their upgraded Wirex account, giving them currency account in British pounds and the new virtual card. And it was really exciting, actually. I was trying to sit there and be kind of patient and quiet while these guys were actually upgrading and getting access to the new features, the new account, their cards. And they one of the guys got his card and made an exchange there and then from some Bitcoin into British pounds, which effectively loads his current account, and then his new virtual debit card is then able to just spend that on Amazon and eBay. And Raf gave a few examples of purchases that Raf has made in the past few days with our new accounts and cards. So we're now waiting for the press release to be released to journalists. When that happens, then we'll be able to open up to the top of the waiting list. A couple of hundred people who have made it to the very top based on their referrals and their previous history with the company. They will be first in line. Once that's done and activated, then in the new week we'll be opening up to more of the UK and then into Europe and as wide as we can allow this under the current licensing and compliance issues, let's say, that we've got to work through. A couple other things. We've got a launch party for the new accounts, probably happening in 2 weeks' time in place of Bitcoin Beer Club. If you're in London, Bitcoin Beer Club is not happening tonight because we've been doing these customer groups in the office. There is one more group tomorrow about from 5:30 p.m. So if you're in central London, you're available for 5:30. We can accept 1 or 2 more people. Get in touch with Raf or get in touch with us in the comments under the video, or find the email from the contact page on the website wirexapp.com let us know that you're interested, and we'll try and involve you tomorrow, and that will get you upgraded to the new current account and virtual cards. The plastic cards are entering the manufacturing process, and whoever gets the current accounts and virtual cards first will then be in the first production batch of the plastic cards, hopefully in over a few weeks from now. And again, we're doing the launch party in 2 weeks in place, so it'll be the Bitcoin Beer Club in 2 weeks from today, or on the Thursday, and that will be, we'll have the founder of Wirex at that event, Pavel Matveev, giving a presentation about the company, about the new accounts, and the future direction that we're taking the products and services in. Very exciting times. So, Raf, how are we doing on Facebook?
We're up on.
Looks like we're there
on Facebook, I think. Yeah, we're there. So that's broadcasting. We're broadcasting on YouTube as well.
Cool.
Yeah, I'm just gonna. Yeah, so we're pretty much good to go. I've got the chart up from last week as well, so we can see it's been a bit of a crazy week since last. We had a few good days after that Thursday, and then it's taken a tumble.
All right, let's go through that. So, as you can see, if you're new to these sessions, then you're going to look at this and think like, what the heck is going on? Not only are there painted lines from the computer, but there's also some hand-drawn scribbles that you can see as well. If this is your first session for these crypto updates, the trading updates, then you need to go to the website and subscribe so that you receive the videos that us presenting the principles behind what we're doing, and go back and watch the past few weeks of video. Even though the price has moved on, you'll get a tremendous amount of insight and education about what we're doing and why we've scribbled and drawn these lines and what it's all about. We're just going to dive in with the updated analysis for now. So definitely go back and watch those videos. If you've been watching for the past few weeks, every week, each video update, you know the story, the journey that we're going on. And for me, it's so interesting what's happening in the market right now. So let me remind you guys a few things. We started when the price was all the way over here, which was beginning of second week of February. Second week of February, we were here and we drew these big purple lines around this area. And this is when I drew the scribbles that went all the way up here, and the scribbles that went all the way down here and curved around and went all the way up here. And then I've got this big circle. This big circle was the target zone that I said we're aiming to reach in this space of time, from the beginning of March through to approximately the third week of March. Where we are right now is we just completed the first week of March. So we have 2 weeks left, and let's take it back a little bit. Here you can see the price went along pretty much the same kind of line as what I'd drawn. There it is, the price just skirting the bottom of that line. And what I said was that we'd come up to meet the trend line that we'd started to draw, and it needed to confirm that trend line, because if we zoom out to here, we can see touch point number 1, which was the $19,000 high price in Bitcoin for that was the 17th of December. And then we dropped very hard, very significantly. And it's like 50% drop in a few days, and then we went back up and we touched this line, this area, and dropped down. So that's where we could start to draw that trend line, and we can see and then we got to the middle of February and we came back up to that line, and that's what I'd projected before that happened. And that's the whole idea of technical analysis. You're not going to be 100% accurate, but you're aiming to look at what the probabilities are and the momentum. Again, go back and watch the previous sessions where we explained that in detail with the presentation slides. And so we were here, we came up to here, and I said maybe we're going to get some trouble around here, because that's going to hit that line that we'd drawn, and that third touch confirmed the trend line, and we did get pushed back down. I thought that if we manage to break through that line, then we'll get resistance at the top of the cloud, okay? And
there is a few dates as well, according to someone on Twitter, that kind of coincide with these big dips, and they've speculated that the Mt. Gox bitcoins, the 850,000 bitcoins, have been sold in batches of around 2,000 to 6,000. So one of the dates here is the 5th of February, the 31st of January, the 17th of January, and the 18th of December. And I think we can kind of see a correlation here. So like the first one is 5th of Feb. So if we see 5th of Feb, if there's a big red candle, yes. And the previous one is, before that, is the 31st of Jan. So I don't know, got one. 6,000 bitcoins were sold according to this hash.
31 Jan was this candle here, which we called the doji. Lost it. This one.
So yeah.
So that was actually the volume here. You can see this volume down here at the bottom of the chart. I don't think we've mentioned this in the previous sessions, but this is a volume indicator. It shows how much trading happened in that period of time. So for 31st of Jan, there may have been a lot sold, but it wasn't actually as much volume as happened in the next couple of days, which caused the continued sell-off. The big trading volumes were this one, 6th of February, 5th of February was a very significant, a high volume day. And we can also see here 16th and 17th of January. And here this is high volume, but look, the price didn't even budge. And that shows the battle that was happening, and that's why we get this doji candle, very small body, but quite a significant wick on the top and a very long wick on the bottom, because the price traveled that distance during that period of time, during that day, on very high trading volume. So I'm not quite sure what the guy's talking about, but yeah, there is certainly a principle with technical analysis where you're comparing what happened historically a year ago, looking for similar patterns, looking for similar dates, and trying to match that up with current situation.
No, I think like as well, but you know, this guy in particular, he's trying to point a correlation between sort of a massive liquidation sell-off of Bitcoin, maybe not as high volume-wise, but the price been purported to have been sold is at $400 to try and start a mass sell-off. But it's it's speculation at this point. But it does look like there might be something to it with the Mt. Gox hack, and we had that news story yesterday about the people getting arrested from the BBC and the BBC's investigation into how that Mt. Gox Bitcoin was potentially laundered. So there's some interesting stuff going on, but maybe I don't know. It's stuff like I was around when Mt. Gox happened, and to see kind of the aftermath. It's still kind of ongoing. But if they have sold all 850,000 Bitcoin or 650,000 Bitcoin, then that's a big position to have lost, and there's only 21 million Bitcoins ever going to be in existence. So 650,000 is a huge portion that has now slipped out and potentially has sort of inflated the market to some extent.
Okay, and that 650 was reported to have been sold in the past few days?
Not in the past few days, in the past 3 months. So since December.
Since December, okay. So if that's true, then that would certainly be a cause one of the causes for a drop in price. And it's good if that has come to an end, because now it means there's less huge liquidity like that, or big amounts of Bitcoin that are looking to be sold and laundered and got rid of. And then once people stop selling, people are still buying. So then that's where you get a change in the direction, a turn in the momentum, and you start breaking out again to the upside, and that's where we're going to get a big rise. So sure, maybe that's a cause for some of what we've seen over the past since December.
I mean, this is the interesting part. So there is a bit of speculation now, because only 650,000 can be accounted for as being sold, but there is another 150, 200,000 Bitcoins that still haven't been sold. And then on top of that, they have a ton of Bitcoin Cash, 850,000 Bitcoin Cash that haven't been touched at all. So there is still potentially room for further sell-offs. It's just to be seen. So these are just things, in my opinion, to keep in mind, and then there might be a bigger low to buy in at very soon if these sell-offs continue.
There might be. I think they'd be pretty stupid to sell off at 8,000 when the price potentially could be 100,000 in 6 months' time.
Potentially, but at the same time, these Bitcoins have been sold at $400 to sort of bring the price of Bitcoin down. So these 650 Bitcoins, some people are purporting that they were sold at $400 purposely to deflate the price,
okay,
or to start a bear run. But
we're not sure why people would be wanting to do that. If it's let's not get into too many conspiracy theories for the chart analysis.
It's on so apparently it's all on sort of exchanges, because they used, instead of using over the counter, they did it on exchanges, so that the orders should be there, but not on Coinbase. So this is Coinbase, but which is, but yeah, potentially, it's speculation at this point, but it's something to be wary of. This is the rumors in the community.
Okay, so let's get back to the analysis here of the chart for this week. We've had, I was explaining the direction so the price hit that trend line, created that third point for the trend line, and got pushed down again, which confirmed the trend line. Then we went back up to test it. So we're still within this scribbly zone that I was looking at. I had expected potentially we'd go up and hit the top of the cloud and then get pushed down. We've actually come up to meet the point, broken through that trend line. We went very nicely into the cloud. And here's what's interesting for me, is that very often when you get inside the cloud, you will reach the other side of the cloud from one end to the other. In this case, we didn't quite do that, but look at this candle. That is, again, another doji, doji candle with a very long wick at the top. I know you guys probably can't see that clearly because of my scribbles, but you can see a strong line going up to, I think it's there, and a very big drop in the price there. And that was a huge day, which was the 5th of March, just a few days ago. And it also indicated a change of direction. And look what we've had. We've also had a potential Binance hack, or Binance having some major issues, people's coins getting sold off to inflate, what is it, V-coin or something?
Well, no, what happened is that an API bot that you can do, so it's a third-party issuer that is popular with Binance users. The developer of the API basically ran some background scripts to make the bot buy a bunch of V-coin, so V-chain. So it's not really to do with Binance, it's to do with this API. And Binance, I think, have come back online, and I think they stopped this. They stopped their service to realize what was happening, and then they found the root cause was this not gun bot, but a different bot API that had basically made these trades and bought a bunch of there are different reported cases. So some people are saying that they sold a lot of their coins, other people are saying that they bought a bunch of V-chains. So there was something fishy going on there, definitely.
Well, So if the API bot should only be able to affect the accounts that it's got access to. If it's playing around with other people's accounts, like I have a Binance account, I haven't even checked. But if my account has been manipulated by an API bot, then that's definitely a problem with Binance platform.
No, I mean, I checked my Binance account and I didn't see any issues. I think it's just people that have used the bot, but then as a precaution, Binance turned off the exchanges. So
Cool.
it's interesting stuff.
So that may have affected price drop, but again, when we're doing technical analysis, we're throwing in these little side notes of news and fundamentals, but we don't necessarily care, at least as a pure chartist, the technical analysis, we don't care too much of the actual news because we can read enough in the chart to trade very successfully. Currently, we're obviously seeing a very significant drop. And we have not yet broken above that cloud, and we haven't yet hit that zone where momentum, to me, from my reading of the chart with the cloud, that's going to indicate very good momentum. But what we can see right at the end of the chart, and I'm going to draw a new bit of scribble onto this chart today, I'm going to scribble over here, because we can see new green cloud forming. That may turn down into red again very quickly because of this very strong drop. But if that holds, if that grows, if the price recovers above again this orange trend line, then who knows, we may actually follow this scribble that I drew now 3 weeks ago as the potential of that price momentum. I suggested when we were down here, I suggested we're going to travel up to here, curve around the cloud, potentially get pushed down back as low as here until we break through that trend line into the cloud, rise up here and catch the end of this target zone as that green cloud forms. And there it is. There's the beginning of that green cloud. Price has dropped a lot. At this point, would I be trading? Would I be taking a trade? No, I wouldn't. But that's the reading of the chart. What we're looking for officially is that break above the cloud there. If we fall out of the cloud again, if we come down here, so we're still inside underneath this trend line, and if this then makes the crossover turn red again, then from a technical perspective, we could be coming back down to meet this level of support. That the market's going to be very glum and pessimistic about that if that happens. That is at a level of close enough to $6,000 per Bitcoin. And then if that happens and we happen to breach, then we could tumble and who knows how low we go. So we're going to be aiming for other support levels, which could be here, thereabouts. It could be down here. So that would be obviously very ugly, $3,000 Bitcoin. Do I expect that to happen? No, and I can show you why. Quickly we'll jump to the Heikin-Ashi candles. Here again, you can see that momentum. When that day happened, we had those long wicks. It was still green, so still strong, good upwards momentum. But then the next candle closed red. When that happens, if you're trading on Heikin-Ashi, then you would exit the trade at that point, and you save yourself from the past 2 days of decline, which is sensible and it's good. And then what we're looking for again is now a new candle. Once that green one comes again, then we can potentially enter the trade, even if we're inside the cloud, because we've got a green Heikin-Ashi, but we're going to be watching carefully because we're still in that indecision phase of inside the cloud.
Do you think the moving average could potentially act as like some resistance?
So certainly. So, well, you know, moving average, you can change the number. Here we've got a 100-day moving average, so it's quite a significant level. We could also add the 200-day. Oh, there it is. So let's just differentiate. Yeah, so that one there, which we did touch, is actually the 200-day moving average. And right now we're just about there as well. So sure, we could potentially see, like, that's a very strong red momentum negative candle. So we could potentially see another candle down that actually touches the continuation of that 200-day moving average, and then potentially find that as support, which definitely happens. And then we might see the turn and then a break again or above this trend line, and then we might see like how accurate that late guess work from me was that I drew on there 3 weeks ago, to then finally break through the cloud again with that green cloud formation. But let's jump to the 1 week chart, and here we get an even bigger perspective on things. We are still, as you can see, way above the cloud, and we've still got green cloud. The gap is closing, so if we had continuation, you kind of get the impression, right? If that continues negative, and this then the average of this future indicator moves down and that turns red, you could potentially see the price of Bitcoin falling below the cloud, and then we're in this territory bouncing around, even maybe down here, and until the momentum, that could be a long-term kind of thing. It's going to take into months. You know, drawing that on the chart, you got August, September, October, November, December. That's, for me, is like really worst case scenario. If we zoom in, and meaning unlikely to happen, because of just the growth of the market, when we get that upwards momentum, and this is a question that we were asked, I was asked by someone, when is the best time to jump back in? That's the idea. And also the idea of accumulating small investments, no matter if the price is down a little bit or up a little bit, you just keep accumulating a small amount. That's a great approach to take. But if we zoom in, this green candle is smaller than the last one. So it's negative pressure on the weekly chart. We might see that turn. And so at this point, it's not a good entry point. You might even think of that as an exit point if you're, depending on the scale that you're trading at.
Oh, sorry. I was just checking for questions, but...
But look, that candle is cleanly above that long-term trend line. So we for now, we are still in positive territory. And then we can jump to a smaller timeline. Let's just have a look at what's happening at the 4 hour. 4 hour is negative because we've fallen below cloud. And there we got red cloud formation. We're below the cloud and we're touching that trend line. And look, right now, the price has just met that trend line here.
Make or break again.
So yeah, so it's another make or break situation. I think, let's see if we can add one new indicator that I haven't explained before. And that is, it's a very, very common 3 indicators for this demo version. So let's just kill off the 100-day. Let's see if that allows us to add. Or I might need to do one more. There it is. This is a really cool indicator. It shows you, and it's another approach to seeing volatility and momentum. It's called the moving average convergence divergence, the MACD. And someone said it's like the McDonald's indicator, the MACD indicator. And what we do, we zoom in and we kind of see, are the lines pointing up? Here's the 0 line. If I drag that over, you can see there's like a 0 level, right? The bit in the middle where the lines are either below that level or above that level. If you're above that level, like over here, look at this. This is really worth understanding. This is on the 4 hour perspective. So the 4 hour is a reasonable place for making trading decisions, entry and exit. But here we had we're still looking at the Heikin-Ashi candles. So where they smooth out the red and the green for momentum. and you've got a bit of choppiness here, green, then red, then green, then red, so you're not quite sure what's happening. And we're also in that zone, we've fallen below the cloud, which is negative. And look here, the MACD in this zone is the blue line is below the red line, and these lines are pointing down. So when you got MACD suggesting the momentum is down, and confusion in the price chart, we're below the cloud, we're choppy with the candles, you're not going to enter a trade. You need confirmation from both sides of things. So it's another check on whether it's a good opportunity for trading. So I really like the MACD. I have it on my personal charts most of the time. It's very, very common, quite a simple one to understand and use. And then look what happened over here. So we're chopping around, and then the blue line crossed above that red line, and then the lines over here, the bar chart, went above the 0 line just here, which was 12 o'clock on the 26th of February, and we had that final green candle. So when it had a green candle on the Heikin-Ashi and the momentum of the MACD turned up, we had not only that crossover, but we went above the 0 line. That might be a place to take a trade if you want to have a go. And then look what happened. The next 4 hours was fantastic, and the next 4, and we went all the way up. So let's just see what you would have got from that percentage-wise, approximately, until the bottom of the next red candle. It's approximate because we've got to change it back to normal candles to see the real accurate price. But that's something like 11%, okay? And that's in a few days. Remember, we've made the joke that the US stock market went up 15% in all of 2017. And here you are with a relatively easy trade, 11% in just a matter of like a day and a half. But then look, the momentum on the MACD started to push down again. And so you might be looking for an exit. So lucky enough, the green candles were still happening. But when you got that red one, the MACD helps to confirm that yes, the 4-hour momentum has changed. We're now being dragged down again by the market. And so you definitely want to be closing your position. So relatively straightforward one to understand again. It's like these moving averages. They're showing the fluctuations. 4 hour is okay to use it, but really you want to stick to the 1 day. Don't trade something on the 4 hour that's not confirmed on the 1 day. If the 1 day is pointing down and the 4 hour is pointing up,
trust the 1 day.
Trust the 1 day much more than you trust the 4 hour. So let's just have a look at the 1 day. So this is now pretty interesting. From that middle of December, let's just hide those. So you can see, look, that huge rally upwards from.
You need to bring the screen over because we're sitting on that part.
Huge rally up from these prices over here, $6,000 all the way up to the 19, and you can see that blue line was above on the MACD all that way. Very nice. And this was a little bit choppy, like a little bit up and down, and then that started going down. So look, when that starts going down, you kind of think maybe the market is becoming exhausted, even though the price was going up. Here now we're looking at the volume. The volume was kind of flat and a bit lower than it had been over here. So that's how you start to put this bigger puzzle together. You're looking at the price chart, you're looking at the trend lines, support levels above the cloud, the Ichimoku cloud indicator. You're also potentially looking at the Heikin-Ashi. That was very strong most of that way, only one red candle there. But the MACD was pushing up, the blue line above there. The volume was strong in a lot of places. But then you start to trail off volume. And the MACD, look, these bar chart MACD, the trend was visibly downwards. Although the blue was still above the line, but you're going to start to be cautious. So when you get that candle on the Heikin-Ashi, when the volume is low and the MACD bar chart's pushing down, you might be thinking about taking your profits. Certainly when you see us fall anywhere here. So that the red candle is a good exit signal. Bar chart is going down, and then right on that crossover, which was the day after the second red candle, even though it's a big drop and you're thinking, oh, I've just lost some of those juicy profits I've been making, if you've entered your trade over here, then okay, it's fallen 10% in a couple of days, but you've fallen below the zero line, and the MACD, the moving average convergence divergence, has also dipped, and so you'll be looking to definitely exit there, and you save yourself a lot of this pain or the lost profits that you could have got. So moving on, if we push that chart over, let's see where we are right now. Oh, look at that. Not looking good. So we've had the blue line above the orange around when I said that we're looking good for a turn of the market, and you can see those bar charts were moving up, still in negative territory. They're below the zero line, but they were moving up, so suggesting maybe we're going to start getting positive momentum. Then we did break above the zero line. The bars are moving up along with the price, good confirmation, and the blue line, that crossover there was round just on that red candle there. So very nice entry point here where I drew this line, which was actually, I think, an original suggested entry point. So yeah, all of those indicators add up. There wasn't a lot of volume there. So it's nice if you see a high volume candle like this one and you think maybe this is a turn of the market. So that's where we'd say, okay, potentially there's a turn of the market, strong negative momentum, strong selling, a lot of selling pressure, but high volume for the next candle, which was green. Then we rode up that blue, and then look, right there with that red candle, that bar chart was lower than the previous one. So you really think momentum looks like it's potentially exhausted. So again, it's confirming not only did we hit that trend line, but the MACD was then lower than the day before, and so you're adding those two things together, and the candle was red on the Heikin-Ashi, so you'd sell there for sure, and so you save yourself some of that pain. And then the turn was there, and then the bar chart started to go up again, following along with the greens, past the trend line into the cloud, and then look, we get another turn, lower bar chart as that red cloud. So you'd be looking to have exited there, and now look what's happening. That blue line is crossing below the orange, and it looks like the bar chart, that little one right at the end, is actually below the zero level. So we're in quite a negative momentum by all indicators right now. Not only are we testing this support level as support, the trend line as support, but we got a big red candle, and the MACD is pushing down, crossing over and below the zero level. I would not be looking to enter a trade here unless you're a bit of a gambling kind of guy, and that's at the 1 day time frame. So bit of a negative picture there for all of us at the moment.
Yeah, it's a little bit disappointing. But I mean, to be honest, for me, it's actually, if these rumors are true about 650,000 Bitcoins hitting the market at $400, then this is actually really remarkable and shows the absolute resilience of crypto. And if there's another 200,000 crypto still to hit the market, I think this is kind of testament to the fact that the price of Bitcoin will be very, very resilient. And I don't think we'll hit those really, really low levels.
So these guys are selling 600,000 Bitcoin at $400. Is that the rumor?
Yeah, and then selling them again for a profit. So they're selling them to themselves on the exchange for 400, and then selling them again for a profit
at the market.
So it looks like market manipulation. That's the speculation on the Reddit and stuff.
Okay, that's very interesting. So yeah, if that is happening, then that could certainly be pushing the price lower, especially as we're below cloud. Well, this is 4 hour. All right, so I think that's generally it. Maybe we'll take a look at just a couple of coins of interest, altcoins. But I think that's good for this week. So what we're looking for is when that's going to turn around. When we get that green confirmation, MACD needs to start to turn back up to give us some confidence of the general momentum. What we're ultimately looking for is that green cloud to grow and to turn up as the price moves into that target zone of hopefully, I mean, it could still happen in the next week. So where's next week on this chart? We are right now 9th of March. So 16th of March would be here. So next week we're going to see where the price is. We might be inside this triangle here, dipped below into the 7,000s, or we might be then pushing back up again through the cloud, entering the edge of this target zone. Any altcoins to have a quick look at, Raf?
Yeah, Nelson's asking for Litecoin.
Litecoin, definitely one of my favorites. We can compare it with the US dollar first. On the 1-day chart, again, like all of the coins, generally, most of them follow the price of Bitcoin at the beginning. If Bitcoin's doing a big dip, then the market is doing a big dip, and I think we've lost a lot of market cap overall. But certainly Litecoin, same situation. It's been in the middle of the cloud in the 1-day chart since middle of February, so 3 weeks. It's a long time to be inside the cloud, not sure the direction, but green cloud future, quite starting to get bigger there, and who knows, that cloud's thinning up, so we could see ourselves drop to there, negative kind of perspective. If we cross over, turn red, then the price could be down in the doldrums for a while longer, or we might get a ray of sunshine, Bitcoin turns around, those 650,000 coins stop getting sold off, and then we could get to this scribbly entry level potentially, or that was where the idea of a green cloud crossover. But if we get in there, then we're in. So right now, no clear direction on Litecoin, still in the middle of the cloud. On the weekly, very quickly for Litecoin, we've got red candle, which means I would not be buying until I see a new Heikin-Ashi green candle. So we may be waiting for next week, potentially even the week after, to see that start to turn back up green again. Any other coin just to have a quick look at, Raf?
Let's have a quick look at Monero. That's quite an interesting one.
I just wanted to point out for Litecoin, I'm interested in Monero as well. I've been watching that. I think it's in a good place, and I'll show you another one that I actually think the looks interesting. So Litecoin against Bitcoin, guys. It hasn't really moved a great deal for weeks. It's kind of interesting. Like you can see, it's in that kind of level. There's no clear trend, right? There's that choppy, the greens and the reds and the greens. It's a similar kind of zone. It did have a big uplift, dropped, another big uplift, and dropped. This is on the 1-day chart comparing Litecoin against Bitcoin. And here, look, Litecoin, because of the current strong drop in Bitcoin price, the Litecoin momentum actually seems to be more positive compared to Bitcoin, even though Litecoin is dropping in dollar value as well at the moment. But here we've now got our MACD on the chart. MACD is still kind of negative momentum, but it's pointing up. It's pointing in the right direction from that Litecoin perspective. I really like Litecoin. Certainly always be holding core position Bitcoin. I'm not giving advice, it's my kind of suggestion, my opinion. And then, but we might be looking for that to close up, and then we get some good momentum in Litecoin again. So that's a quick one there. Monero.
Yeah, let's take a look and see how XMR is fair.
Monero against Bitcoin on the 1 day. So today's candle is small. Or this is Heikinashi. We'll check out the real candles. Today's candle is inside the previous body candle, and it's another doji. It's that moment of indecision again in the market. So maybe Monero's running out of steam, but it's done pretty well. It's skirted along the edge of the top of the cloud, quite choppy, reds and greens, but cloud was good. There was a moment some days ago where the cloud went red, but then it went green again, and so we've done a very nice increase there. MACD, you can see the current bar is lower than yesterday's bar, so we might be starting to see some negative pressure there. Volume is fairly low all the way through the past while we're doing this choppy stuff, but we are above the cloud.
Few steps.
Chiku span, the lagging indicator, is still above the price. So overall, Monero still kind of looks good in terms of momentum versus Bitcoin, but just today the momentum looks a bit negative. Let's check out the real candles quickly. Oh, look at that. That's Monero had. Monero had a big drop today, bigger drop today than it has in quite a while. It's like on par with this one here and this one here, and we've had another big one. And that here with the point is here that this candle is not only big, but it's completely covered up the quite a significant green candle from yesterday. Although the day hasn't finished yet, we can only make decisions or judgments on a candle when it closes, which if you're looking at the 1 day chart, then you're looking at midnight UTC time, Central Time. So we got to wait, but if that closes there, then it's called a negative cloud cover, because it's completely covered the previous day and it's pushing down further. So that could suggest negative momentum on Monero to continue, and we might see it come back down and touch the cloud again as to act as support. The MACD is certainly, it's a bit choppy, but it's right now suggesting down. So that's a bit on Monero. Would I be buying that right now? No, but I'd be watching it because of this nice green cloud. We are above cloud. This is comparing it with Bitcoin, so potential. Let's have a quick look on the 1 week chart. 1 week chart is, look at that. That's very interesting. So you get some weeks with Monero.
The monstrous.
And look, this is fascinating for looking at the Ichimoku cloud. You had this area, just going to drag that over a little bit more so you guys can see.
This is what people use Monero and Ethereum as sort of like a Bitcoin hedge when they feel like the markets are not in Bitcoin's favor.
Yeah.
They'll try and earn some Bitcoin with Ether and Monero.
So, this is a 1 week chart. So this is all the way back in end of 2015 over here, which is where this 1 week cloud becomes visible, and you can see it's red, and the price is below that red area, right? I guess you guys can see that clearly enough on the screen. And then we break above the cloud, but then we fall back and get pushed under it again. But that could have been a potential buying opportunity, and probably that would have been a reasonable, that would have been a good entry point. However, you would have felt a little bit sorry for yourself because the price did drop back down into the cloud. But then look what happened when it tried the second time. It broke out of the cloud, the 1 week cloud, and what's the expression? It's like kaboom, right?
Yeah.
That is, we can even see what that price increase is. Right from there, in a week's time, Monero was up 300%. And then it went up for a week after that, and then it dropped just as significantly. That's a big, painful drop. And then it went up, and it went down, and then here we've met the cloud again, kind of skirted below the cloud a little bit, but we broke, if I can zoom in there. That cloud, once it came out of the cloud, it just, another huge rally, and then came back to settle around the cloud, another huge rally. So that's an interesting chart. And right now we have crossed over here. This is called the TK crossover with the Ichimoku, where that blue line has gone above that red line. I think you can see that.
Oh, so someone's asking as well to look at NEM, because I think NEM is one of the green candles today.
Okay. There's very good weekly momentum on Monero because we're above that TK crossover and we have green cloud future. However, this week is starting to paint red. So we're looking for next week probably for a better entry point. And we can also draw our trend lines because we can draw the top of those candles there. And that touched, this was back in August. And then again we got to that same level at the middle of January. And it touched there and it fell back down again. But now look, we've broken above there, which is fairly significant. Depends on, like Monero's never been higher now compared to Bitcoin.
Yeah, I mean it's also like it's very resistant to like manipulation because Monero and kryptonite means that it's very hard to sort of see what effect what sell orders are being placed, what buy orders are being placed. It's very hard to mine it and to store it. So to build a Monero wallet is like one of the hardest things to do, and it's ASIC resistant. So you can't mine it with application specific hardware. So like this is like blockchain sort of 2.0, and it's been if we look kind of zoom out since sort of December, where Bitcoin's had that tumble, Monero's sort of had kept increasing in Bitcoin price, and who knows? Like, yeah, it's not really been higher, but it's got quite a bit of positive sort of fundamental behind it as well.
It's interesting that you get a very strong green candle, then pretty much near enough a return to previous price, and then it creeps up, and you get a big green candle, then a few weeks where it returns to pretty much to the previous price, and again the big green candle returned all the way to previous price. So
I used to play the waves on Monero, so I used to buy it around I think 0.014 Satoshi and then sell at 2.4. So I'd have my buy orders and my sell orders set at those two levels.
Nice.
And
looks like that worked well for a while.
Yeah.
And now ratio is a little bit different. But what we might see is that this if that level holds, then we might see that actually act as a new support level, and you might get Monero growing relative to Bitcoin actually until we get maybe another green candle, and then look out below because we're going to see another one of these big falls, and that might come back again to that level and then start another. They're called market structures, where you come back to equilibrium, you jump up, and then you got to come back to equilibrium again. So it's pretty interesting chart. We're going to end this session very soon, but let's just have a look at what was the
NEM
XEM against Bitcoin.
Oh yeah, NEM even that would work. Yeah.
Yeah. What do you want? We can look at Poloniex.
Wow.
And this is a weekly chart. So here again, it's kind of similar to Monero actually. You got back here June of 2016. Where's the cloud? Where can you see cloud? Here we can see cloud start to form based on, I guess, a bigger drop. Like there you got a big drop. It takes a lot of weeks. It takes a lot of time frames. Can't remember I think it's 26 previous time periods. So we're looking at the week chart. So it's a lot of weeks that have to happen before you get the cloud start to appear on your chart. So we can see that happen there. And then, we're just doing nothing and we fall below the cloud. Here we can see the cloud start to appear there. The price is below cloud, and then look what happens once we creep above cloud, which first happened there. That candle was red, so indecision in the market. Then you got a couple of green candles for a couple of weeks, which is still above the cloud. And then look at that, that's a beautiful trend, because if you enter when you got a couple of nice strong green candles, it confirms that the price is good momentum, and you catch that ride. Let's see that price increase from
and
there.
the MACD as well looks very like positive for that.
Exactly. Let's touch on that. So that's 433% until the bottom of that red Heikin-Ashi candle, which is approximately the gain from the start of that entry for the weekly time frame perspective. And yeah, let's take a look at MACD. Nice big gust of wind right up to the top there. And then
The next one's a bit shorter.
And then it's shorter, so you definitely want to have exited the market when you see that turn down. And then we got cross below. So here, this is interesting as well from that charting perspective, because it's like the dead cat bounce kind of scenario. A lot of people are thinking, okay, these are interesting candles, because you had one strong week down, but then one very strong week back up that closed just about at the same level as the previous week. So the market, so that might have been a turn of the market, and then the price did go up. People started to buy, but they bought into a dead cat bounce, because look what happened. For many weeks, the price tumbled again, and it's suggested by the MACD. The momentum didn't cross back over here. The momentum was still pushing down below that. The blue line was below the which is the faster moving average, was below the slower moving average. So the momentum of the market was still pushing down. So if you had this up and you saw that, you might be cautious, thinking still the market structure, the strong momentum is down. You wouldn't have taken that trade, and you'd save yourself potentially that rally that then dropped and fell for many, I mean, that's months, because each one of these candles is a week. And then you're below the cloud, and you're really feeling sorry for yourself, because you bought a dead cat bounce that fell all the way down below the cloud. And then look what happens over here. And so this is the crossover on the weekly MACD time frame. That bar is then above the zero line, because we were below the zero line all that time, which is it's actually, the crossover happened. So there you might be looking at an entry there, and then we got to here. Then there was an indecision, a very strong week up. So quite interesting at a quick glance of the analysis for NEM. But look what happened. Again, it's another market structure completion. This thing, interestingly enough, if we draw that horizontal level on there, those previous weeks, we didn't quite reach it cleanly with the body of the candles, but the wick did push above there. In fact, the wicks of these candles and these candles were pretty much spot on. So the price went back to its previous all-time high. Didn't break above. In fact, the end of that week closed below the body of the previous, which was back in May of last year. So
it looks like
a nice attempt, but you know, no cigar kind of deal. And then we get a turn of the market, and unfortunately, it's just done that kind of a nosedive, like that one previously. And so we're over here. A lot of red candles. We're below the cloud on the weekly time frame. Cloud is a bit confused over here. Got the start. We had the start of a green, but now we've got a bit of red, and I think that's crossed over again. I'm not sure if that's trying to paint green or red right now. We do have a green candle here. The bar charts are still in negative territory below the zero, blue line below the orange one there. The bar chart is below that one. So we're looking for a bar chart in the next week that would be, smaller than that one, and hopefully this blue line looks like it's bottoming out, going to start turning up, and so we're looking for a bit of a that's a badly drawn candle, but you get the idea, guys, is trying to draw. Let's just look at the Heikin-Ashi.
Yeah.
If we zoom in there, I'm just going to delete that.
Oh, there we go. Oh.
We're still red, okay? So there's no turn of the market, even though see, this is another interesting bit. This is why you look at both the candles and the Heikin-Ashi. The candle's green. It looks like NEM had a great week. And if you look at the 4-hour perspective, or even the 2-hour perspective, or the 15-minute perspective, the chart might look fantastic. Let's have a very quick dip at the 15-minute chart. Oh, look at that. It's rallied. Look at that. Incredible growth. And that's all of a couple of hours worth of time. And something might be happening there. But you know what? You can lose 50% that you've made the 50% in just space of a few hours. If you go and make a cup of tea, then you might be down 70%. You don't want to trade at that level. If we jump back to the 1 week perspective, yes, fair enough, we've had a good week. The candle is green. It's been a positive week so far, but the market structure over that weekly time frame is still negative. The bar is longer on the MACD than the previous one. Blue line is there. We're below cloud. The future cloud is choppy and not quite clear. So that's why we confirm with the Heikin-Ashi, because that again gives us a smoothed out view of the momentum, and that is still a red candle. So I would not be looking to enter the market for NEM at this time. I'd be looking for maybe, like I said, the week after, until we find a green candle formation on the Heikin-Ashi, and then maybe we got something there. Maybe that rally is going to happen.
Do we have time for one more, maybe?
Let's have a very quick look.
Nebulo. Samantha is asking about Nebulo on YouTube.
Which what's the ticker? Well, how do you spell it?
NEB. There we go. So the first one.
Neblio. I don't know anything about this coin.
Me neither.
Well,
that's like not even.
This coin has been around for
10 weeks or something.
Well, no, yeah. So 1 month, like 3 and a bit months maybe, or it got launched. So I don't even know if it's an ICO. I don't know anything about the coin. So on the weekly time frame, what can we see? Not a lot. Not much volume happening. There wasn't even that much volume on day one when it hit the account and did this big doji, big battle for price. Obviously you can see the momentum is down at the moment. Don't really need a trend line to see that, but got that kind of thing happening, top of that week as an average. Let's look at the day chart on there. Now we start to see cloud formation on the day chart, and that's red because makes sense, the momentum has generally been down. So what we're looking for is a journey on this coin. Who knows, that could just extend and fall back to its previous to its low, which is down there. And what we're hoping for is that the price somehow catches some momentum. Maybe they release some good news, they release a beta, whatever this coin is about, and then that starts to move back up to meet that continued trend line. Let's extend that out. And again, the score, guys, by now we're looking for that red cloud to thin out and then to cross over and become green cloud. And then interestingly enough, where that crossover happens, very oftentimes you'll see the price breaks through at that level where it's crossed over, because it's thin, it's easy, like thin ice, it's easy to break through. So that, that's a potential scenario that could happen with Neblio, and that would make that middle of April-ish that potentially we could be looking for a breakout. Until then, we might be just pushing down still, or we could come up here to skirt along the bottom of the cloud until the market gets more confidence, breaks into the cloud. Once we break in, then we're looking for the price to cross over to the other side of the cloud. If it breaks above there and the chart goes green, then that could be a nice entry point if the project is good. If it's a dodgy ICO, then
stay away.
I think I saw the news story, like 50% of ICOs last year have fallen to zero.
That wouldn't surprise me at all. The other thing is even that now the successful ICOs are now getting hit with subpoenas from the Security and Exchange Commission. So crazy.
All right, guys, that's it from me for the update for this week. Just a couple of reminders again. We are doing the focus groups, the customer groups coming in, privileged customers who are getting to open their current accounts and their virtual debit cards. We've already done a couple of those sessions this week. We have one more on Friday. We have space for just 1 or 2 extra people. If you're in London, contact us and we can invite you in. And then we have a launch party happening in 2 weeks, but I'm pretty sure that generally the UK will be open to the UK within that space of time. So register for the waiting list. We will announce access very, very soon, and we already have had access. And Raf, you've been able to make a couple of purchases with the new system on eBay and Amazon.
Yeah, on eBay, Amazon, and on a gaming site as well. So I bought Dirt 3 for £3 with Wirex, and it's a processor that doesn't work usually with prepaid cards, so it's very, very promising for the Wirex debit card.
Because the new Wirex card is not a prepaid card, it is a real debit card, because it's drawing from your real currency account, otherwise known as a current account. So it's a whole new platform. Check out details on the blog, on the website, register, be ready for that. And we'll see you next week for another update of the charts. And in 2 weeks from today, we have the launch party. If you're in London, join us. There'll be a big event with Pavel Matveev, the founder of Wirex, joining us that day to give a presentation on the company, the future of the company, the products and services we're introducing, the struggles that we've been through over the past year. I'm sure that'll be included. So that'll be a really great event in the centre of London in 2 weeks' time. Until next week, Gabriel and Raf signing off.
Take care, guys. We'll see you again soon.